Morning, I'm Carol Harmer from Charmer Trading, and I'm here to talk you through the weekly outlook for the euro dollar. As you know, last week we had an extremely strong week, mainly on Thursday and Friday. A non-farm payroll figure came out, market went a lot higher. Now we couldn't sustain that on the close, but we did close the week higher. So let's just pop over and have a look at the chart for you. Now, as you can see, the base that I've been talking about for the last 3 to 4 weeks has come to fruition, and you can see quite clearly where the euro double bottomed down there at 11.05, 11.06 area, and we've just gone basically up in a straight line. Now, we're beginning to be a little bit overcooked on the top side. You can see that the RSI is beginning to turn down on the daily. Stochastics haven't turned yet, but you've got to keep your eye out on these indicators, because they can help very much with market timing, and this is what really this is all about. The other thing that I'd like to talk to you about is the dollar index. Now, you can see this double bottom, and what we're going to try and do is preempt of where it's going to go next. Now, I've used pivot point analysis, and what I do is on my chart I put on the weekly and the daily pivot points, and that just gives me a visual, a guide to what I think it's going to do. And at the moment, as long as we stay above 1280, I can't see any reason why the euro won't go higher. Obviously the dollar index does come into the picture, and I'm going to show you a chart of that in a little bit. Now, we've broken through some good resistance at 13.25. All we've got to do really is maintain that and see if we can push up higher. You've got the next level that I have is the 200-day moving average, as you can see, coming in at 13.70. Now this ties in with 13.75, which is the 78.6 Fibonacci level. Now we use Fibonacci levels not for trading so much, but what they're used for, where will a market retrace to? And depending on what Fibonacci you are looking at is the relevance of it. For example, if a market is in a downtrend, you should not exceed 38.2 retracement of that move. So it helps with your timing, because you know where you're going in if the market is still in the primary, secondary, minor trend. You can see on the chart I've just showed you that the 78.6 at 13.75 is going to be a really big level. But once we've broken through the 38.2, you could see that the market not only had a basing chart pattern, but that we'd gone through some significant resistance on the top side. Therefore, we could only go higher. That's the way it works. Now, if we take a look, I'd like to take a look at the dollar index with you, because I think if you are trading the euro, you really need to know about this market. So there we have it, the Dixie. Okay, so we have not yet broken through the 61.8 level, and this is really significant. And the thing is with this, if you look at this, you can see that it ties in with other factors. For example, you've got a low in the dollar index over here. You can see it. So it's not only meant to just be a Fibonacci level, it also points you in the right direction of other levels. So you can see there that the low on that day was 96.35. You can see over here that low was 96.35. So now that we've got the 61.8 at 96.35, it just double increases the strength of that level. So we now know that to carry on lower, we've got to break 96.35 in the dollar index. Now what happens if we don't break that level in the dollar index? That's fine. The trend is still in place, because as I said to you, markets can retrace back, blah, 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 blah. The most I think they should retrace is 78.6. We do look at the 0.886. Now that's basically where you would put your stops. So for this week, what we're doing, we're keeping our eyes so on the dollar index, okay? It really is going to help you master how to trade the euro. We're looking at the euro and we're looking at that 1280 area, 1280, 1270. If this continues to hold, we have another 100 points on the top side. So it's very important that you look at these levels. With the dollar index, I just said to you, 96.35 is the level on the downside. So if that breaks, we're looking at 95.70, we're looking at 95.30, we're looking at 94.90. So this euro could actually go up to 14.25, 14.40. Okay, so as long as you realise that to do this, you've got to look at both of them. Okay, and that will help with your timing as to when to go into a trade. So at the moment, I'm looking for pullbacks in the euro to be correctionary, and I think that we can still go higher as long as we hold above this 1270 area. If the dollar index breaks 96.35, then all bets are off. Euros will go higher, but we know where we're going for. We know we're going to head for 13.75 to 14.25. Okay, well, I hope this has been enlightening. Good luck, and I will catch you next week.